We heard from the Bank of Canada this morning, and as expected, no change to interest rates. The Loonie ticked lower, and the big theme for the day was around uncertainty and a very cautious approach going forward. Andrew, thanks for being here. What can you tell us about what we heard today?
It was an interesting communique because on one hand, they acknowledged that growth through the first half of the year was very strong. They believe the output gap closed in the third quarter. But on the other hand, they acknowledged that given how consumer debt levels are very high, that they would need to take a cautious approach going forward, which was something of a surprise to markets.
Something you mentioned to me was around the protectionists and a lot of risk around inflation and some of those pieces, household debt levels. What do you see in the cards there?
Well, first on the protectionism side, they enlisted as their number one risk to their inflation outlook the possibility that Canadian exporters will see heightened protectionism going forward. That would obviously have negative implications not just for exports, but for business investment and ultimately headline growth. So it's something they're clearly watching going forward and probably contributed to their cautious approach. On wage inflation, the bank has said several times that wage inflation has been a bit lower than they would expect at this point in the cycle. Consequently, they believe that is another argument for moving a bit more cautiously going forward, and it contributes to the fact that they believe there's maybe a bit more slack in the economy than some traditional measures might suggest.
When I spoke to your team last week, I asked about, what are your expectations in terms of when we could see the bank move again? And the next date was thought to be December. How does that look? Is that still what you're expecting?
Yeah, I think December's still live. The bank is still ultimately data dependent, and they did say that going forward, less monetary stimulus will be required. So their path over a medium-term horizon is still to higher rates. Having said that, given that they are explicitly stating they need to be cautious about lifting interest rates, I think there's clearly a higher bar to December than perhaps we saw last week.
And I mentioned the Loonie did tick lower. We're at around 78, 79 cents US. What's your outlook both short and long term?
So short term, we wouldn't want to be fading this move lower in the Loonie. We think we could see it sort of mid 77 cent range would be a possibility as a short term point it could hit. Longer term, though, given that we do think the bank will be hiking twice before the end of 2018, we should still be able to, and given that growth is quite strong in Canada, we should be able to see the Loonie still make it into that sort of 84, mid to low 80 cent area mid next year.
Thank you very much.
Very welcome.